Hey guys, Josiah here from EasyCaters.com. Wanted to do a quick walkthrough of the Equivolume trading intraday on MU from Friday. I promised I'd do another video on this, and I didn't have a chance to do it on Friday itself, so I figured I'd go back over it this weekend and get it posted for you guys who are interested in this kind of trading. So the essentials of this method are we're using equivolume charts, and equivolume shows you the relative volume based on the width of the candle. So this candle is wider than this candle, so this candle has a lot more volume relative to this candle, and so forth. So the relative width tells you how much volume in shares is traded in that bar. And then I have my time-based relative shares per trade indicator applied as well, which highlights the colors based on how many shares are traded on average per trade during the course of that bar. So the brighter color means larger orders are coming into the market, larger players, larger accounts are making commitments in the market, and so those are areas that you want to look out for. So these brighter areas are the areas where somebody with a lot of money stepped in. That's essentially the what that's saying. And this is based on averages, of course, but the essential thing is that it looks at this particular bar over the course of the past X number of days, and it says how many shares per trade are usually done on that particular bar over the past X number of days, and it looks at how many are done today and says, is this unusual or not? And if it is unusual, if it's high, then it's colored bright, or if it's unusually low, then it's colored dark. And then average, of course, would just be the typical middle of the road color. But anyway, so that's the essential here. I think the highlighting really draws your attention to the important areas where people with larger accounts and larger orders are hanging out. And then the relative volume helps you know whether or not this is whether or not a specific direction is the direction that you should be looking to trade in. So I guess as a quick example here, if you see the morning, we had a lot of high volume come in, a topping tail on a high volume bar, and then we had several high volume candles come in pushing down and closing near the lows. And we had a small topping or bottoming tail here, and then high commitment came in here, or at least above average commitment came in here to kind of pause that as we closed this gap. And so this is high volume in the downward direction, telling you this is the context. This is the direction to look in for now. Now that can be countered if we have a high volume, a really high volume or high commitment bar such as this one or this one. Especially if this was a, we have some follow through on the next bar or something like that with the same above average commitment and direction and so forth. This, to me, is more saying there's resistance here, but it's kind of rangy because we have a topping tail here and a bottoming tail here. It's really not telling us much yet. It's just saying some larger traders stepped in here with an order. Now, if you look at this, this is what I look for. I look for shrinking width of the candle, a narrower candle than the previous, and smaller commitment. So we've pushed in this direction. We're doing a retracement. We put in a low volume, low commitment retracement candle with a topping tail, as a matter of fact, and it's right at the MA. There's not a lot of closing price action above the MA at this point. These closes are all basically at the MA or below. So there's not a lot of strength here. This looks like a weak pullback to me. That's what that all comes together to say. So at this point, I'm looking short on a break below the low of this weak, puny candle right here. And I would put my stop above it, and it triggered immediately and went straight to target. It was a completely painless trade there. And then we start having another. I mean, it's almost identical, really. It's the same exact setup. High volume here, bottoming tail, and we have this push up, and this is all basically one candle. This is all just stopping. This is the pivot right here forming. This is just a range forming where different players are adjusting their positions here and making a pivot form. And the same thing with these two candles. This is basically the same candle. But anyway, so we have high volume in these three in the same range. There's basically no movement here. We have the retracement form on low volume. We don't close above the MA, or we don't have much closing above the MA. Looks like we open above the MA here, close below it. So again, this is looking weak. This is a higher volume candle. This is pretty low, but this is, it's a little high. We don't know if most of that volume was done on the initial up push or if most of the volume was done on the topping tail that countered that move. But if you looked into the 1 minute time frame, I bet you would see that there was probably more volume done on the downward move than on the upward move. But anyway, in either case, it's on low commitment, and it's not closing above the MA, indicating that it's kind of weak. And so at this point, this would be another short, a break under the low of this candle, and that breaks. We get some heat right here. It can't sustain itself. It can't hold above the MA still. It's still looking really weak. We had a topping tail here, just a very tiny one. Just not a lot of closing action above the MA. And you see it drop off again. So at this point, actually, we had one good trade, another good trade. This was actually another good trade right here on the break of the low of this candle here that touched the MA on low volume and low commitment. And so that one could have been taken as well. It's not as good. Doesn't have a topping tail like these do. But in the context of this downtrend, I think it would have been a valid thing to take, especially as this is like squeezing itself down toward this flat base. You can take this as just a cupping kind of pattern that's about to break down. So I think that would have been a valid take as well. You could have added to any of these two positions as well. And so that was that. This one was not a valid entry, didn't touch the MA. I wouldn't have taken that. So here we had a candle that came up and touched, had a small topping tail. Under this candle would have been a valid short if it triggered. But now we start getting closes above the MA. See, this moves substantially above the MA. And now we get into this kind of range-bound behavior. And this is pretty typical. After you made a big move, you can need to consolidate some. We had a small consolidation here with two kind of zigzags. This one was only one. We had some consolidation here with two zigzags in a way. And now, since we made this big move, we're going to likely see some more sideways action. So this one could have been a valid short. However, again, in the context of all of this, chop and so forth, it's not really looking that great. However, since this, what I look for in these ranges is I look for a good candle pushing away from the range, which I think this is a decent a decent push out of that range. And so I actually did take this trade as a continuation of this overall move with the assumption that this candle indicated a break below this range. So it triggered me in, but it immediately had this high commitment bar, and that's not usually what you like to see. You like to see these forming at the bottoms and tops, and so I don't like to see that this is forming here where my entry is, because that indicates that a bottom is perhaps forming here. And so that's kind of what we get. That was an immediate stop out. So we had 1, 2, possibly 3 add-ons here. And then those were all winners, and then we had our first stop right here. So let's see what else we've got. Now again, at this point the range has just kind of expanded, and so again, this is just in the middle of a range. This is a valid entry if it isn't a trend, but right now we're kind of just in this sideways range on low volume. So we have another push below. Let me expand the, yeah, and this one probably would have worked. This one probably would not have, and it doesn't actually even touch the MA there. But I probably still would not have taken those because we're just not in a high clarity type of situation. This is all just kind of chop. And so we had a huge volume, high commitment candle come in here, right at the low of this prior candle, just kind of straddling that. And so then we start going sideways again. Let's see, I'm just trying to read kind of what's going on here. You know, so we had a close above here. It's not ideal for a short, but I could actually see taking this short on a break below that, and it looks like that would not have worked. Let's see, 92 by 02, so I probably would have done that on a 10-cent stop, and that would have been stopped out. So that would have been stop out number 2. So if we look at this, kind of our stats for the morning, so far we have 3 winning entries and 2 losses. And just so you know, I mean, get on my soapbox here for a minute. In trading, if you think that you're going to find some type of system that lets you avoid losing, you really need to come to grips with reality, because no system out there will allow you to avoid all losses. The systems out there that do allow you to avoid most losses, in other words, that have a high probability of success, those systems always have small average actual wins. So like you can improve your profitability or your win percentage, but in exchange for that you're going to give up your I guess the size of the win. So you know, where you might have earned you know, on this type of entry you might earn $500 or $1,000 per trade. On, you know, the higher probability systems, you might only earn $100 or $200 on a trade, and just you would take fewer losses. But when those losses happen, they're usually going to be bigger losses, because you have to give those types of systems bigger stop sizes or a lot more room to pivot and so forth. So anyway, just a thought there. I know a lot of people are out there searching for the magic system that will avoid losses, but One thing that I came to realize a while back is that the edge is actually in the losses. And what I mean by that is edge is created by human nature. Humans are by nature impatient, and humans are by nature unwilling to take losses. They don't like pain. So a trader's edge is really being able to be patient where most humans are not able to be patient, and willing to take pain where most humans are not willing to take pain. And so there's many sources of edge, but I like to think of edge as basically taking advantage of human weaknesses, such as impatience and immaturity and so forth. And so if you can learn to approach your trading from a different perspective, where you're not looking to have the perfect system that never has losses, and you're not looking to take trades that pay you within the first 10 seconds or something like that, and you're patient enough to wait for a pivot to form sometimes and that type of thing, instead of cutting your earnings short and keeping your stops big and so forth. If you're willing to look at it in a different way, then you can find the winning system. It's not going to be a pain-free system. It's not going to be a 100% winning system, but you'll be able to cut your losses short and let your winners run. And that's something that human nature fights against. So most people are not able to do that, and that's why most people lose in this business. So anyway, that's just an idea. The source of edge is human weakness, and so you need to be able to approach trading from a little bit more mature, I guess, with a little bit more of a mature attitude and realistic expectations and a little bit more patience. In any case, so we've got, what did we say, two losses and 3 wins. Okay, so now we're kind of doing this chop sideways, back and forth through the MA. Here's a context bar right here, and this would be a valid short. I don't like what's happening here because this is not really moving. So I would probably be looking for a little bit more clarity at this point. Yeah, and so this, if you had taken this, this would immediately stop you out. I like to trade in very clear situations, and so a lot of times in the afternoon you just don't have a lot of trade setups that are just really clear, because the afternoons tend to be range bound a lot of the time. Now we do have a setup here where this came back and touched the MA after kind of pushing us down to the bottom. So this could have been a valid entry. Looks like it just kind of got stuck in a range again. So yeah, we got, looks like it's not stopped out yet, but looks like it probably did. Yeah, so there would be a stop out there. So let's put that to 3 losses. And so this was actually an entry in the opposite direction if you were looking for a reversal. At this point, I honestly would probably just not be that interested in much of anything. Let's see here. So we had, move back up to the top of this area here, low of this. Got a little bit of commitment in the downward direction, small counter candle. So actually this is not a bad long candle right here. We've got the MA sloping up. We've got some some movement away above the MA and then a bottoming tail on this candle. So a break above there would be a valid long entry, and it doesn't trigger. And instead this green candle looks like triggers. Yeah, so that one would have been the trade there. This one could have been a potential entry too. Not really that great. Yeah, there's just not a lot great happening at this point in the afternoon. Yeah, so this actually, I like this as a short. It's not perfect because this is so high commitment, but it has this topping tail right on the MA, and if it had triggered below here, that might have been an interesting setup. As it is, we're still just kind of getting this sideways chop. So I don't know if there was another setup or not. Let's see. None of this is really setting up. It's 1:20, so this is 1:20 Central Time. I'm in Nashville, so I'm in Central Time. Yeah, not really strong context in either direction here. Some commitment coming in here. It's just a lot of like short squeeze back. You know, it's just a lot of sloppy back and forth action. No real setups through here. We had some good move there, but this would have been the only way to take that, and that's just too wide of a stop at this point in the afternoon. This one could have been a valid entry. Topping tail, low volume. It's not really a smooth retracement back to the MA, especially through all this. This is just a nasty move here. It's not very interesting at all. So I probably wouldn't have taken that, but it probably, yeah, it did work. So yeah, and we had an entry there as well. And yeah, those both would have worked, but I probably wouldn't have been involved in them just because at this point in the day it's just looking too gross to actually trade. But this could have been, let's see, that one I would have been willing to take, and this one potentially as well, had this action been a little bit clearer. So you could call that one good entry there as well. And there's the close. So that's kind of how this system fared. So it looks like 4 wins and 3 losses. The wins all were 2 R's, and the losses were all 1 R. So what that equals out to is 8 R's minus 3 R's is 5 R's total for the day. So that's how, you know, and your R can be whatever amount of money you want to risk. Some people start out with a $50 or $100 R just until they get comfortable with their losses and so forth, and that's a good place to start. You know, if you have a $100 R, that would be $500 net profit at the end of the day. Or if you have a $1,000 R, then it's $5,000 net profit at the end of the day. So that's what an R means. It's just a risk unit. A lot of traders evaluate their system in terms of risk units, how much they win versus how much they risk on each trade. And so that's how I evaluate my systems. And so, 4 to 5 R's net on the day is a pretty good. That's a pretty good day. And this is actually not one of the best days that I've seen. There's a lot of choppy action in the afternoon. But anyway, that's how I look at this, and that's how I evaluate these trades. Mostly I'm looking for a smooth trending environment, maybe with some volume context, a bar giving me some context in one direction or another, pushing away from a basing area or a range-bound area. And I look for pullbacks that look really puny and weak compared to that type of move. And then I have a few rules, such as, I want it to be touching the MA. I'd like to see a topping tail or a bottoming tail in the direction that I will be trading in. Things like that to indicate additional signs of weakness in the pullback and so forth. So that's what I'm looking at. If you find this interesting, please share my videos, like and subscribe, and I'll be posting some more in the near future here. I appreciate it, and we'll talk to you soon.